conversation with the pioneer of technical analysis in India, only on ET Now.
Back. Bit of a move on the upside, obviously gold now being to F&O strategies, but before that a quick disclaimer from our end. Please be sure to consult with your individual financial advisors before you take any position in the futures and options space, because while you may make windfall profits, you can also land up losing quite a hefty bit. We'll be joined by Dr.C.K. Narayan. Sandeep Varghale will be joining us shortly as well. Dr. Narayan, will start off with you. I believe it's from the oil and gas space, a ratio spread on petrol and LNG.
Yeah, I see petrol and LNG now is going on in the market. 168, 69 is where it is trading. I want to take a slightly bullish position, so I'm using the slight OTM calls here. 170, 180 is what I want to use for a spread. But like I mentioned in the index strategy, I don't really want to pay too much money, so I want to use a 1/3 ratio spread so that I keep my cost down to about 50 paisa at the most. The 170 call is trading at about 3 rupees, while the 180 call is trading at about 80-85 paisa. So net on net, if you do a 1-into-3 spread, you'll probably fork out about 50 paisa. I don't expect the move to go much beyond 180, but at 170, 180, you are protected up to 190. You'll have losses above that. You don't have so many days. I don't think the stock will move so much that it will put you in a loss. So I think this is a safe trade, very low costs, and something which will give you money if it goes up on your 170 call. And the other thing, we had a long call position on Infosys, which I said hold on, but that seems to be a complete washout today because the stock fell with a gap. So if you want to salvage whatever little is left, I think you should go ahead and do that. I think it's been a write-off again. We raised a small amount of money, but even then that has not worked out. So that is one. The only other pending trade is my long-term short in GTL, which, if you recall, we initiated somewhere around 95. I asked people to roll over at about 65 levels in the last month. It's trading now at about 48. I think we should roll over further into next month. Your roll cost is very small, 5-10 paisa profit too. But leave aside the profit, that is not what we want to look at. Just roll it forward because I think the stock is headed even lower. There isn't anything to stop it. It is in an inexorable trend on the downside. So let's keep on, sort of rolling it until it seeks a level where it will not go down anymore. So roll over the GTL short. Right. It's a permanent short even as of now.
Dr. Narayan, coming back to Infosys, while you said we should salvage what we can, just as an afterthought, is it probably, a time where we've gone long, should we take twice the short positions?
No, most certainly not. Mainly because we are at a point where the risk, I think, far outweighs whatever rewards you may get on the downside. I'm not against a downtrend here, but I'm just looking at it from a risk-reward perspective. And I think at this stage, your sort of willingness to stick with a trade is what would be paramount. And sort of given the kind of situation that we have, I don't believe we will all have the courage to stick with a trade even if we take them on the downside. If you are of that, let's say, metal where you can create a short here, hold it across maybe the end of the month or through some rallies, then most certainly you should follow the trend. But if you think you're not of the convinced type who would be sort of shaken about with some changes in the market, then short trades are not really for you. So there is analysis and there is trading, and they are two different things. As per analysis, you should be trading short. As per your emotions and as per trading strategies and as per risk, you should be really weighing your trades by the terms of risk to reward.
Okay. Take a look at the Nifty. We were just having a conversation about what happens if Nifty breaches 4800. We were 5 points shy before we went into break, and now we're at 4797. We've reached 4800, the first time since May 25th, 2010. We've reached the Sensex, the 16,000 mark on the Sensex as well. Those are the Nifty laggards. Keep an eye out for them. Real estate as a pack, remember, lowest level since July of last year. Are you surprised with the kind of,
I didn't hear the last part. Could you just...
I said we've breached 4800 in intraday trade. What kind of a signal does that give out?
Well, we reached 4800 and then we have quickly broken back up again to 4830 even as we speak. So somebody's clearly defending it. But I think all these upward spikes that we are seeing are really short covering rallies and not really something where some value buying is coming in from some big player. Until those sort of players really sort of step up to the plate and aggressively buy, it's very difficult for the trend to sustain. So I would say for traders, these are the kind of rallies that they used to short into. So I think that sort of situation is going to continue. So really not much of a hope with Friday ahead and Monday. Have the people not there? I don't see anybody really coming in aggressively to do anything. If at all, traders might want to lock their profits in and go home and spend a nice weekend, celebrating their gains. So you may see some gains from shorts being covered, but I don't really see any fresh buying coming in, at least not as of now.
Sure. Dr. Narayan, pleasure to have you on the show this afternoon. Thanks very much for joining in. That's all.